Let's start off with the macro investment picture right now. It's really interesting. Like, what the hell's going on out there? The fear and greed index is very easy to follow. Exactly how it's calculated, I've never digged into the details, so that's actually making me think I should go and do that once I finish recording. But basically, people are really scared right now, and the markets are reflecting that. The big R word has come out. Ooh, recession. Maybe there's going to be a recession. What's going on? And so that there are some indicators we can look at that help us to navigate these treacherous waters as capital allocators. And some of the things that are flashing up for me are pretty obvious, actually. So I'll try and work through them as they come to mind. But first of all, am I scared? No, I'm not. It's very simple. Like, I have a large allocation to Bitcoin as a weighted percentage in my portfolio. It's in self custody, so it can't be taken away from me or debased. And the primary thesis for Bitcoin accumulation and capital growth is very much still in play. What's going on right now is a little bit of noise. It's a bump in the process. Nothing goes up in a straight line. And so don't expect to buy Bitcoin and get rich tomorrow. Like, that is absolutely not what's happening here. And I like the phrase, like, Bitcoin is a not get poor slowly scheme, which is effectively what's happening when you leave your dollars in a bank account and they get eroded with inflation. So some of the signals I'm looking at are, first of all, the 10-year government debt markets. These are useful to pay attention to, purely just to see, like, what is the confidence in a currency? What is the confidence from the marketplace given to a government's ability to pay their bills? And in America, it's actually it's markedly improved. Like, people are more confident, and it's interesting because there's almost like a sense of austerity that the Trump administration is currently bringing in, and the Department of Government Efficiency just chopping all this cost out. That means the taxpayer is not going to be so burdened. It means that, in theory, the government won't rack debt up as fast as it previously was, and basically they are more accountable. And you're like, oh my god, this is fascinating. It's a twist in the tail. I generally have this kind of carte blanche approach to governments are completely unable to manage themselves effectively. They're unaccountable. There's no true owner or manager, and they basically use the taxpayer as a get out of jail free card. And either they increase taxes or they do a stealth tax through inflation by printing money. And the debt to GDP levels have reached such a state that it's basically just a mathematical calculation to show that they cannot not print more money. But I wasn't necessarily factoring in the idea that they might just get slightly better at balancing their books. And in particular, the US is such a key driver here because they are the reserve currency of the world. And with that power comes great responsibility, ironically. But if they can balance their books more effectively as a federal government and on a state level, then they won't necessarily need to print so much money because they won't take on so much more debt. And that debt burden becomes less of a problem for them. Now, is that actually happening? Will they actually be able to take the costs out that they are claiming they are doing? Time will tell. But the 10-year long US Treasury market shows you clearly that people have more confidence in them than they did 3 or 4 weeks ago. Okay, that's very interesting. What else is going on elsewhere? Well, I read that the Japanese, the UK, and the Eurozone debt costs have gone up. And that's essentially a vote of no confidence. And so what happens in an environment in where, like, most global markets are looking recessionary, or markets are fearful, or markets are clearly voting with their money and saying, we want you to pay us more if you want to borrow money from us for 10 years because we don't think you're going to pay us back. Like, that's a vote of no confidence. And that filters through to the United States, whether or not they're strong or not. These other places that they trade with, very important they're trading on well, not a fair playing field, that's the wrong way of saying it, but basically, if your trading partners are going backwards, you're not going to make as much money. If you can't make as much money, they drag you down. And lo and behold, these other economies are going to put the brakes on what happens elsewhere. So that's quite interesting. Like, what does the long-term debt market teach us? And I always pay like a little bit of attention to that. The next is gold. Like gold has rocketed in the last 4 weeks. Like, why is that? The oldest and soundest money that, humans ever had access to, and generally considered a bit of a canary in the coal mine when it comes to inflation. So it's like, hang on. So why would government debt get cheaper in the US, but at the same time, gold start moving? And that, to me, is an example of people going, actually, I need to hold the soundest assets I can get hold of. And in my opinion, I mean, I'd be selling that bond tomorrow. Absolutely no doubt about it. But still, these are interesting mechanics. Where this is going is my view at this point is sit tight. The bull market for Bitcoin, at least, hasn't got going. Not truly. We haven't really seen retail get that excited. You look at the Google search metrics, like there's nothing really that important looking at historical search numbers. And basically just got to sit tight. We're in a bit of a trend here. These 60-day periods play out and the moving averages play out. And a price can only move so far. So when we were sitting at 105, 110,000 US dollars of Bitcoin, that is fresh territory, right? And the energy required to get up to that point, it peters out. And then the bears kind of take control. And like all markets, things like they lull and then they ebb. The night is darkest just before the dawn. And so right now, blood on the streets, start buying. Or the contrarians are looking for do the opposite to the herd. And if I was the US government and I had just passed into law using an executive order, the ability to take Bitcoin onto my balance sheet, and I've got a lot of assets that are just basically eroding in purchasing power on my balance sheet, I'd be looking to reallocate as many of them as possible. Like you'll note in the executive order, there's a wording along the lines of all Bitcoin purchasing must be budget neutral, which to me basically means they're not going to print money and buy Bitcoin. But it doesn't mean that they can't move stuff around, sell things, and buy Bitcoin. And the first thing I'd be doing is scaring the market and being like, yeah, sorry, guys, the asset inflation that you're all expecting to see because of money printing, well, look, we're getting super efficient. The show's over. We can balance our books. But the price comes off. And, Bitcoin's down from its high of 110K or whatever it was a couple months ago. And even in the last 4 weeks, it's off another 10%. This is a buying opportunity. Absolutely. And what people confuse is the difference between price and value. And so just to kind of harp on value for a moment, do I believe that governments have the ability to balance their books long term? No. Do I believe that central banks could continue to print money out of nothing in order to support governments? Yes. Okay, well, inflationary monetary policy is here to stay. If that's the case, then sound money or sound assets like Bitcoin, like gold, represent a way to actually store purchasing power over time. So I don't know when it's going to happen, but I have a good hunch that it's going to. And so there's no place I prefer to be than Bitcoin and self-custody, because you have all the upside potential. Yes, there's some volatility to the downside in the short term, but do I need to spend it right now? No, I just got to hold it. And yeah, it's just a really fascinating time. So it's almost like if you were trying to pull the strings and you're like, let's pull the price down a bit. There is smart money out there that is accumulating right now. Now, on the flip side, who's selling? Well, there's going to be some people that, YOLO'd in at 100, 105 that have seen it come off by 20%. They're like freaking out and selling. And these are people that just do not understand the value proposition of Bitcoin. Now, I want to draw attention to a great book that I'm reading, Larry Lepage, shout out to Larry, called The Big Print. And in it, he uses a wonderful analogy that helps you, I think, really drill into what's going on right now, which is he's a pilot. And as pilots, I've never flown myself, but this makes a huge amount of sense just from a first principles basis. As a pilot, you are constantly scanning for potential problems. And those potential problems can be any manner of different things that threaten the safety of your flight. How many airports are within range of where you are right now with the current levels of fuel that you've got? Is it foggy? Is it windy? What are the other weather conditions to consider? How many other current flights are airborne in and around you? The pilot is essentially constantly doing checks all around them for potential risks. And how Larry points out the current monetary system is basically the reason that planes crash is not just one bad decision. it's a consistent connection of poor decision making. So, for example, you could check the weather forecast and you want to take your plane out and you've been dying to do it for a few days and you're like, I'm just going to do it, even though it looks a bit blustery and it looks like there might be a bit of cloud cover at some point. And so you take to the air and up you go. And suddenly you can see the clouds drawing in. You've gone a little further than you thought you wanted to. You took a plane with 2 engines and one of the engines pumps out. You're like, holy shit, this is a massive problem, a completely unexpected problem. But it compounds on the fact that now the weather's drawing in and you're further away from the airport than you wanted to be. And so suddenly the amount of options that you have to actually bail yourself out of trouble gets smaller and smaller. It's like, are there any other airports I can get to? Yes or no? Is there another engine I can use? Yes or no? Is there more fuel I can get from somewhere? Yes or no? Like, how bad is the weather forecast going to get? And the analogy is, for 100 years, essentially, as central banking and modern monetary theory has become part of the economy of today, they've started to use different tools over time that compound to create the problem. And so today, when debt to GDP levels are sitting at, circa 130% of GDP, no economy has ever actually come back from the precipice that is that debt to GDP level. But they've almost always defaulted. I think Japan is the only example of a country that currently hasn't. But equally, the problems that they have and the yen carry trade are well documented, and I recommend looking into that. Point being is that whether they use quantitative easing or they use stimulus or they start actually tapering off their balance sheet, whatever different tools a central bank has at its disposal, it's essentially like that pilot that's flying that is reducing the amount of options they have available to them to safely land the plane each time they intervene in the market. And that's what's going on at the moment. It's like, okay, fine. Asset prices have come off momentarily. There's a bit of fear in the market. Maybe they can balance the books. But actually, I don't think that's possible. And you look at all the errors that have happened over the last 10, 20, 30 years when it comes to like zero interest rate policies. So what do you mean the cost of capital is zero? That cannot be true. If that's true, the capital itself is worth zero. And so what I'm trying to say is that right now is a lull. And there's some interesting things going on in the market that they don't really give me cause for concern when I sit in Bitcoin self-custody, but you can look at them and you can start to make decisions of your own. It's like, actually, maybe this is a buying opportunity. Could I reallocate some capital from a different area of things that I own into Bitcoin that at 80,000, 85,000 US dollars, I think is an absolute steal. And come August of this year, maybe even September, we're going to look back on this March and be like, wow, I can't believe the last 6 months actually just happened. But the point is, it's like a balloon that's blowing up, falling back, blowing up bigger, falling back, blowing up bigger, falling back. And it's as more and more capital is being pulled out of the analog world into this new digital store of value that is Bitcoin. Some other areas just to kind of focus on, which are interesting to think about, is what the stock markets have done. And if you look at the credit cycle trends of the last 50, 100 years, going from inflationary to deflationary, inflationary to deflationary, you'll see quite clearly that things like commodities and gold tend to do pretty well in inflationary periods, and vice versa. Equities markets perform differently on the other side. And so are we going into a super inflationary environment? Are we about to see, as Larry calls it, the big print? The amount of money that's about to get printed by the Federal Reserve is mind-bogglingly big compared to what was done before. It's kind of like a heroin addict, right? You try a little bit, ooh, that felt good. Try a little bit more, ooh, that felt really good. Before you know it, you're getting the biggest hits you've ever had, and you're completely addicted. And that's what modern monetary theory essentially is. It's like they are a crack addict, just feeding, and each time they need a bigger and bigger hit to make the system function.